In today's video, we're taking a look at some of the most underappreciated market indices that you're probably not looking at right now and why you should be paying attention to these during big times, especially important seasonal events. We'll also be taking a look at our technical analysis levels for the S&P 500, Nasdaq, Bitcoin, Tesla, gold, and more. There's a lot going on in the markets right now, guys, so stay tuned to have a discussion right now. See you soon. Okay, well, let's begin our market recap for the close of the 3rd of August 2021 in the American market. And one of the best places for us to take a look at the charts is always going to be the heat map here of the S&P 500. You'll notice that we had the FANG stocks turning around from negative to positive throughout the trading day. Healthcare continuing to be a shining force, something that we've been very heavily following now since June. And then, of course, banks actually rebounding, even though the US 10-year continued to slide a little bit throughout the day, or at least stay sideways. So why are these types of things important? Well, understanding what's happening on the day is important, but understanding what's happening on the seasonal is even more important than that. We've actually taken here the monthly averages over the last 20 years, and we've demonstrated very clearly that the months of August and September tend to be sideways to slightly weak, and this is for the Nasdaq, and this will come into our analysis throughout today's video. It's very important we know that. The other thing that we know is that the S&P 500 also tends to be quite weak in the months of September. So these are just stats, and they should always be in the back of our mind. Should we trade off them? Should we invest off them? Possibly not. I mean, it's not every single year that occurs, but it is something that we should keep in the back of our mind. So if we see the technical levels, we see the trigger points happen, we're there and we're very well aware of what happens over that period. So yesterday was the movement down, and then of course a huge movement up after that period. Now, it looked pretty shaky in the morning, and we hit some very key technicals that we've demonstrated several videos past that were very important for the S&P 500 in particular. And we're using that as our key demonstration of whether there's strength or weakness in the market. So it bounced off the low on the S&P 500, quickly rebounded, and by the close of the day, we were actually up almost 1% across the S&P 500 and Nasdaq. When we go and have a look at the actual sectors within that, we noticed that the biotech sector was doing the best. We had energy coming back a little bit, the water sector, which is a very good one, the agricultural sector, the healthcare sector. No surprises, many great sectors that have been running for the last couple of months there, and particularly great to see biotech having another good day. We're in the middle of earnings season. As we know, big stocks coming out. We had Alibaba come out, and it was, a bit lackluster, I guess you would say, from the initial reaction. By the end of the session, it did regain quite a lot of that. And if we go over here to something like Wednesday's session, we're going to have Roku, we're going to have Etsy, Uber, Fastly, some big names coming out after the close. These ones could demonstrate quite a lot of things because, of course, Amazon started this whole scariness into consumer discretionary. Will Etsy show a similar number? That will be one that I'm watching quite closely, and I hope that you guys also are checking that out. Let's get into the technical analysis now. What's going on with the volatility index? Well, straight away, you'll notice the volatility index was unable to breach and close above 20. We know that whenever the VIX, or the volatility index, is above 20 and it holds a level, it's on. And it usually coincides with a key technical zone, and we'll talk about that in just a few moments. But yes, volatility index above 20 is one of the key figures for when we start to see that real uncertainty coming back into the market. Another thing, dollar index, have we seen strength or weakness here? We're stuck between the 50 exponential moving average, which is this daily blue line here for anyone that doesn't know, and this red line, which is the 20 exponential moving average. So until we close above 92.20, we don't have any strong bullish tendencies towards the dollar index, or we close underneath the 91.80, and then we have bearish tendencies towards the dollar index. For now, stuck in the middle of the range, nothing much we can do about it. Let's move over to the US 10-year yield. That's found some support and it's kind of bouncing off that level. This is very important to the susceptibility of something like the banks finding weakness. So we'll continue to watch this zone. We've theorized that it could go down to 1.03. This is, of course, hurting Michael Burry because he came out and said inflation's back. This is kind of demonstrating inflation is not back, at least at this stage, because the 10-year being so low. This is, remember, saying that the 10-year interest rate in 10 years' time is going to be 1.18%. Can you imagine if it was that low still? That would mean that you better have your risk on, yeah? Because that would be really, really bad for many investments out there, specifically, of course, holding cash. Let's move over to the gold and silver investments. Now, if we're looking at silver, this looks great. You know, we've looked at this several times. We've talked about this flag. The flag has broken out. We've got a long leg doji on the 8 hour. It looks like we're going to complete above this zone of 2560, which is definitely an area I was looking at. And if we do get that completion, we've talked about the idea that silver and gold are both in seasonals right now. These are looking quite strong, and they're exactly set up where you would hope further bullish pressure comes through. I mean, you can see how silver is really preempting a very nice move here. If we move over to gold from a technical level, it's also finding some strength. Remember, they do move in a little bit of synergies here. Gold coming off that 1810 base that's been holding. We need that really above the 1816 with a nice significant close on a big time frame. And it is looking like it's putting a base in. It's time for gold and silver to usually find strength. This is the seasonal period of the year. Seasonally, actually, also, we have weakness in US dollar generally around this time. So will it all come to fruition? Of course, some of them are looking a lot better than others. We'll move over to Tesla. Tesla stocks, yeah, it's not the rally I would have hoped of such a close. So we closed above, of course, the 700 level, and there's a lot of options going into this right now. Now, I'm not sure what Wall Street wants to do, but generally Tesla is pretty ferocious. So when it does move through, it tends to move into that, you know, really quick resurgence of price up to the 780 would be the idea, and 740 being the first point. At this stage, being above 700 is still very, very good, and we expect buying pressure around this level, which did happen through the yesterday's session. You know, 700 was reached, and it bought off that session. So that's very important to note. We're still in the channel, we're still broken out of the channel, and we're looking towards bullish pressure here in Tesla if it can hold up. So good luck to everybody out there. Other things that we're starting to look at, and we talked about this at the start of the video, are you looking at the indices that matter? So the index that matter. This is one of them. That's the New York Composite Index, New York Stock Exchange Composite Index. You'll notice this is very similar to our story about the Russell. It's in a massive channel. If you're in a massive channel, what does this mean for your opinions on the market? Well, you should be, generally speaking, longer term, if you're talking about longer term, neutral, because we don't have a breakout to the top, triggering like, you know, a huge move here in all of the stocks, and we always don't have a move to the bottom, which is triggering, of course, bearish pressure. We're right at the resistance, and you wouldn't be a fool for saying, oh wow, this previous daily candle was a huge rejection, a shooting star, and it looks very, very bearish. In fact, many things were looking bearish yesterday, and we just didn't quite get the final trigger, which we'll be talking about in a few moments. So things were looking bad on this stock exchange, and you can go back over this and see what happens. But if we get a trigger above, let's say we close above 17, what would this be? About 16,770, something like that. Then that's saying, okay, we've broken out to the upside and it's good times ahead. And if we continue to find weakness here, which would be the day, this is the day that weakness has to come back into the stock market, then we move back down and start to go back into the range, start to the middle point, and possibly even put pressure on the 16,000 flat here on the New York Stock Exchange Composite Index. That would be a big one. Similarly, the Russell, which is really affected by financials and the US 10-year, that did find early weakness here and then found a little bit of a bounce. It's in the middle of the zone. We've demonstrated on several occasions that this is all about, you know, it's a war between the bulls and the bears right here, right now. We've got those 3 rejections. We have a bullish hammer yesterday. I guess you could say the market has no idea exactly what it wants to do, but this is the type of traps people play, and it hasn't got a trigger on it yet in terms of the S&P 500, but if it does, this will be where we see the weakness. Remember, weakness starts in the smaller companies and then goes through to the bigger ones. If you're talking about a correction, generally weakness starts in the smaller companies first. Let's move over now to the US 30. This is another one that's trapped in a range. You'll notice a very tight range-bound area between these two support and resistance lines. Nothing happened yesterday to get this broken out. So the Tuesday session, nothing happened. And therefore, we did bounce off the support and found some strength. But where I think the biggest interest is going to be the S&P 500. This is the zone of the real market, the SPX, on the daily. And we've been demonstrating this many times. 43.72 it was. I like the 70 level. And then, of course, we've got 44.30 on the top. Now, if we close above the top, what's that demonstrating? The market is looking to go more green and green and up for a little more period of time. Now, if we get underneath this point, what's going to be happening? We're going to get through a 20 exponential on the daily, and we know that triggers historically back to the 50 exponential moving average. It's done it 4 times now. And if we get underneath the 42.50 zone, wowzers, that's where you start to see the real weakness come in on this market. So we're still trapped from a day trader perspective within a very tight range. Anyone that picked it up yesterday, I mean, there was a great day trade here. You can clearly see the rejection that occurred. Once that rejection occurs, like it did here, you get a little bit of a follow through. Day traders will be piling in to take profit near the close. And of course, there's resistance up here at the 44.30. So it was a great trade yesterday. And if you're watching that, hey, remember the trend's up. If you're seeing this type of rejection off a very key support, you're starting to paint a picture that means that you should be looking at that on the smaller time frames. Like, it just makes sense, yeah? If it makes sense, why shouldn't you have a look at it and try to do those types of things? Let's move over here to the QQQ, and this is the Nasdaq. For anyone that doesn't know, we've got our strong trend line here that's been resurfacing. I think this is a really hard index to watch at this stage. Could you say it's in a range? I guess you could say there's a key support here at 362. I'm going more with the S&P 500 is going to show us the way, and the Russell and the NYSE, those types of indices are the ones I'm really looking at. But I actually think the biggest weakness is going to be in the Nasdaq once that starts to occur. This is the one, while I love all the stocks in here, they're really a little bit, potentially overpriced. Plus all the hype is coming out of them because the earnings season is over for the largest companies in there anyway. And the smaller ones are now reporting. So it's like all that stuff where you say buy the rumor, sell the fact. When the hype and the anticipation of the event is over, often the market takes a breather and then gets ready for the next hype and anticipation. It's like everyone goes and watches a film in the first 2 weeks when it comes out the cinemas. And then after that, I might wait till it comes, well, not on DVD or Blu-ray anymore, but I might wait till it comes on the streaming service. You're prepared to wait. It's that hype period that's important to understand the stock market as well. It works just like human psychology in that aspect. So yeah, QQQ stuck in the range, S&P 500, the most key one for us to be looking at. And we'll move over here to Bitcoin and of course Ethereum. Now we've got some key comments coming out here, and I won't read them out, but basically the SEC's come out and said, again, we think there needs to be some regulation around this market right now. That's, I think, long-term good in this, at least the stable coins, but short-term it's bad. It's hurting Bitcoin here a little bit. Bitcoin's coming back down. Look, there's many good support levels. You've got that 36,000 support. You've got these 2 moving averages here, the daily 20 and the daily 50. You've got probably a fib of the whole move down that it can bounce off, so you can take the whole big rally fib. 38,250 zone. You guys know I love that area for looking for turnaround kind of, lightning bolts, etc. So that would be awesome. And if we go over to Ethereum, you'll notice this is holding a little bit better. So again, with Ethereum, it could come down to 2,400. Find the previous resistance, find support, look for lightning bolts. Could be some good trades here in the crypto markets over the next coming days. So definitely worthwhile checking that out and bringing that into your own system. In terms of news, remember Wednesday brings the ADP non-farm employment change first number, and we've also got the ISM services PMI at 10 a.m. New York time and 8:15 a.m., which will be live streaming through the Wednesday session. So join us there. Another thing to note, of course, Friday is going to be non-farm payrolls day. And this is a really important figure. They've been getting it wrong. And the more they get it wrong, the more the market has not priced in the correct numbers. So remember, that creates volatility. It creates opportunity. But more importantly, it does create a certain level of risk that you've got to be aware of. Thanks so much for joining us today, guys. I hope you're all having a great day. And remember, join us 1 hour before the New York Stock Exchange opens. At 8:30 a.m. we'll be starting the stream, and of course 9:30 a.m. in ET the market will open. So join us there, subscribe if you enjoy the videos, and give us a like. It does help us out. Thanks so much. Bye for now.